Hello and welcome to today's video on high altitude investing. So today's video is about candlesticks. What if you could understand why a candlestick went the way it did and how it could affect the price down the road? Well, that's what I'm going to be teaching you today, and I'm going to be going over what makes a bullish candlestick, what makes a bearish candlestick, and all of the basics that come along with understanding candlesticks so that you can start trading on, Poloniex or any other cryptocurrency exchange or even stock trading with this knowledge. So let me just get right into the video here. Now I have a free Google Docs that comes with this video. I'm sharing this in the description of the video so you guys can come along and reference or go back and see if there's anything you missed or something you forgot. So I have this right here, like I said, link in the description. Now basically what it is so what are candlesticks? Alright, well, the candlesticks were invented by the Japanese, and it's basically just a different way to show price movement inside of a market. So before candlesticks, what we would have is moving averages, right? So you would see the average price movement because it's just lines, okay? So you would see the average price movement in between a certain given period of time. Now, the Japanese found a much better way of doing this, and that's with candlesticks. It's just a visual representation of some data that happens in between a given time frame. Now, little disclaimer here, there's risk involved in trading, so anything you do with this advice is your responsibility, and I do not take any responsibility for losses that occur with trading advice. Okay, now some things you'll need is a computer, a cell phone, mainly to be watching this video or to be looking at charts, and a little bit of time. So what you're going to learn in this video is how to read candlesticks, a few candlesticks patterns I look for, what's important about using candlesticks, like why would you? And so yeah, let's just get right into this. Now, how to read candlesticks. That's the very first thing. It's really important to understand how to read candlesticks. So like I said, they're a visual way to represent data invented by the Japanese. They're an excellent way to indicate what other people are doing in a market and why, because trading can sometimes be like a game of chess with other traders reading why the other traders are making the moves that they are. Why did he put his queen right there, and when, and what was he thinking there? And so by reading what the other traders are thinking, you can kind of figure out how to capitalize off of their mistakes or their trading flaws. Now obviously you want as many people to succeed around you as you can, and that's my goal. But other traders are just bound to make mistakes. We're human, so if you can capitalize off of that, then that's that's good for both people, because then maybe he'll learn not to make that mistake, and then you also capitalized off of it. So it's a win-win, really. Now here's a diagram that shows you what candlesticks are. So I'm just going to go ahead and point some things out right here. So basically the wick is this black line right here, and this is the line above and below the body of the candlestick, and it represents the complete price movement in a given period of time. So let's just say that these are 10-minute candlesticks, okay? Now, or 5-minute candlesticks actually. Now this wick at the very bottom was the lowest point that the price hit within in a 5-minute period of time, and this wick up here was the highest point that the price hit in that period of time. This body right here, this is why it's a bearish candlestick, because it's black. Normally they're red or maybe blue, or they have lots of different colors, but this one's black. And the reason it's black or a bearish candlestick or a downtrending candlestick is because the open of the candlestick, so right when 5 minutes started again, the open was lower than the close price. So that means it lost value in between the 5 minute starting point and the 5 minute closing point. So that's why it's a bearish or loss in value candlestick. And then, or vice versa, you can, you know, say if the close happens above where the open was, then it's going to be a bullish or an up moving candlestick. So that means that it opened at a lower price than it closed within 5 minutes of time. Now, so basically the body is a portion of the candlestick with on the top of the wick and the bottom of the wick. It represents the price when the candlestick is in a certain time frame, begins, and when it ends. So bullish or green in this case, or bullish or green, and in this case white, are when the open price is below the close price. So, you know, like what I just explained. Now, the reason I have this document for you guys is so you can come back and read this and be like, oh, so that's what he meant by that. Now, a time frame, like I said, is a given 5 minutes period of time. So that's, you know, right after the candlestick appears, there's 5 minutes of time in which that candlestick is being formed, which means a whole bunch of data, whatever data or price movement happens within that time is collected, will represent the final candlestick. So once that 5 minutes is up, it's immutable. It can't be changed. Once that 5 minutes is up, that candlestick will be that way. It's set in stone that that was the price movement. But in between the 5 minutes, the candlestick can kind of bounce up and down and go around, you know. So it's important to use candlesticks because it's way more accurate. So as you can see right here, here is a bunch of candlesticks. Now there's a couple things I wanted to point out on top of this too. Usually these candlesticks right here, with these wicks down like that, usually means people are getting into the market, especially if it's a bullish candlestick, an upwards candlestick like this white one here. So that usually means people are trying to get into the market at a cheap price, and that's why the wick went down so far. Now, this green line is a slow moving average, or an average of the price movement. This is what we used to use. This is the way we used to look at you know, stocks or price movement, is just with a line. Well, the Japanese thought of this amazing way to make a lot more information held in this given period of time. As you can see, there's a lot more stuff that happened inside of the market in this period of time and can be represented by the wicks and the bodies of these candlesticks, whereas a moving average just kind of gives you a line that's like, oh, it kind of went here, kind of went here, and kind of went there. Well, actually, it went clear up here, right here, and clear down here, and we have, you know, there's a lot of different opportunities with volatility to make money in between that type of move. And if you're just only seeing a line, then you're not going to get the full story. Now, here's some candlestick patterns that I look out for. Bearish engulfing. So this is when there's two wicks up at the top, people trying to get out of the market, and a lower point in which the body closes in comparison to where the open point of this candlestick opened. So the bullish candlestick here opened higher than the bullish one, than the bearish one closed. So the bearish one closed at a lower point than the bullish one opened, and that's called a bearish engulfing. There's a whole bunch of different ones here. These are dojis. That's what these little things are going on right here. They're dojis. Shooting star. These are basically just some candlestick patterns I use occasionally to look for certain indications of where the price is going to go. Now see, here's one after an uptrend, 3 black cows. Let me show you exactly where that happened recently. So I've been trading Bella today. See, 3 black cows right here. these three candlesticks there. I'll just draw a line so you can see better. These three candlesticks right here went in the same exact pattern. Oh, where's my Google? Is the same exact pattern as right here. It's the same thing that happened. And then here's these white shoulders after a downtrend. These white soldiers. So, you know, it's just, those are just different things that indicate where the price is going using candlesticks. And they're very, very important to understand. It's important to be constantly watching them. You want to always be seeing why a candlestick did what it did, the wicks, whether the bullish players are in the market, so the people trying to push the market up, or whether the bearish players are in the market trying to push it down. You can get a lot of that information through candlesticks. And like I said, it's kind of like a game of chess. You're trying to see what your opponents are doing. Now, if you can properly determine that, then you can capitalize off of it. Okay. One more quick little thing for you guys. I just wanted to show you an exercise you can do. This is really important. You can hop on tradingview.com to do this, or I think you can do it with Crypto Watch, which I made a video on how to use. And yes, I am going to be making a video on how to use TradingView. Just to prove it, I'll write it down right now on my list because everybody's been requesting it. And I always write down my requests. TradingView tutorial, because it really is like a good way to be looking at charts. But yeah, you can hop on Crypto Watch and do this. And I'm just hitting my right and left arrow to go in between candlesticks here. Now, with what I've taught you in the video I just made, basically, so let me go here and hold on. This is stop. Okay, yeah. Sorry. I was just putting something that I needed to real quick into this video. So yeah, anyways, back to viewing. So yeah, basically if you go to the little candlestick pattern thing I have here, I'm gonna go ahead and zoom in because that way I can get a bigger view of this photo. I may have done a little overboard on the zooming, but let's just look for some of these patterns, okay? So, bullish tweezers. We'll look for 3 black cows, bullish tweezers, and 3 white soldiers. Alright, so let's just go over here to Ethereum. Alright, so Ethereum is just downtrending. This was back in 2015 of 09, 08. So Ethereum's downtrending and you're just waiting. You're like, okay, what should I do? What should I do? I don't really know. I'm not sure yet. And then you see this and you're like, hey, I know that. That's a buy signal. I've seen that before. That's that is 3 white soldiers, I believe. That's what that is. See, even I need to practice it. It's a great little exercise you can do. Yeah, 3 white soldiers. Thought I was right. So yeah, you're like, okay, now I just found the 3 white soldiers. Let me bring this over here. That's interesting, and you keep going, and you're like, okay, it kind of came down. It went down past my thing. I'm still holding my price. It hasn't told me to sell yet because it's not below like a little bit below this point. If I was trading this is what I'd do. Now I'm just watching, I'm watching, and oh hey, there's the 3 black cows, I think. Yeah, 3 black cows. All right, so there's the 3 black cows. Now Ethereum kind of goes down and down and down. So that would have been a sell signal, right? And I would have made profit because I bought in around here. Well, actually, I would have came out at a little bit of a loss on that trade right there. Now, let's see here. And that's really up to your trading plan. And, you know, like I have a video on trading plans. Watch it. It's excellent. You always want to have a set of rules for certain given parameters of indicators that you're using. So, which I have a video on indicators and all of that. So that you can know, you know, when to do a trade, even if you don't want to, because emotion is what gets all of the traders. You can't trade with emotion. You have a set of rules that works on a given market, and you follow it. Now, let's see here. Where's another one we could look for? Bullish tweezers. Bullish tweezers. Alright, this one, 3 inside up. So 3 inside up, I'm sure I can find this in Ethereum. Very clearly, I found this in Ethereum. So let's go back to the candlestick chart. 3 inside up, you know, this red candle, 1 close to it, and then 1 up. This red candle, 1 close to it, and then 1 up. And that's not the best. That's not a perfect example. Let's see here if I can find a more perfect. Haha, here we go. Here's a more perfect example. This is a lot better right here. That's a huge buy signal. That's after a downtrend. This usually means an upward move in the market. And guess what it did? It did exactly that. It made a huge upward move in the market. Now, then we saw this. Now, where have we seen this pattern before? Well, if we go back over to our candlesticks thing, we see a bearish engulfing. So this is where the bullish candlestick is above. Right here it's even, and right here it's engulfing, right? So the red candlestick is engulfing. It went below this point. So here's the top of the green, bottom of the green, and the red candlestick went below that point. So that was a sell signal. Now let's see what happened after this sell signal. And you can just do this all day. You know, you can back test. This is back testing. And boom, boom, boom. You know, we had a little run up here. Not really much to speak of. But hey, after that, Ethereum was done. It was literally done for. We haven't, like, you know, obviously you can make money off the volatility, but that was a huge, huge sell signal right here. And it brought Ethereum all the way down to this zone right here. So it's important to understand price movement. It's important to understand how this right here is a good buy signal. This is this pattern, the same pattern reversed. So let's go back to our candlesticks. Bullish engulfing. So that's the same candlestick put back around the other way. So that's a buy signal. Also, this wick down right here means a lot of people were trying to get into the market at a pretty cheap price. And it's, you know, ever since that signal, we've seen steady increase in values, a little bit of trending. Nothing crazy yet. I mean, we've had some nice moves, some nice swings up, but nothing insane. But we are seeing a general increase in value. So a lot of opportunity to make money off of just simple trading candlestick patterns. So yeah, that's what I want you guys to do. Is if you want to, you know, have a little exercise you can do to check your trading and, you know, practice these candlestick patterns so you have a better eye for them, I highly recommend doing this. Now, remember the fact that if a new candlestick is forming, then there's going to be a bunch of price movement in between that period of time. So until the next candlestick is made, so until the candlestick that should be here is made, you can't honestly determine what the two candlestick patterns represent until the next one is made. See, like for example, back to our king here. Oh, come on, I don't need this. Wow. Wow. Alright, back to the start of this little thing here. If we go up to the sell signal that we've seen, and we look at this sell signal, and I clear all the indicators because somehow I managed to get a big old mess here. And we look at this sell signal right here, in between this spot and this spot. Ooh, come on. This spot and this spot. So the reason that you have to wait until the next candlestick, this candlestick right here, I'll just draw a little on it, this candlestick right here, the reason you have to wait for it is because this one is still deciding its actual price movement. So it could change its mind and go clear up and then become a bullish candlestick, you know, randomly in between it. So you have to wait for this entire, these are 1 day candlesticks, so you have to wait for these 2 days to complete and then see where this one's at, so that you can determine whether that actually was a bearish engulfing candlestick, which I believe, yeah, bearish engulfing. So that's basically a little exercise you can do. And yeah, so I just wanted to throw that in there real quick. So yeah, basically just a summary is that they were invented by the Japanese. Bullish means a price in the move up. Bearish means a price in the move down. And they're a much more effective, efficient, and accurate way to see what way the market is moving. So yeah, I've got my Discord chat channel. There's always people online. You can go, you know, join my Discord chat. It's really easy to set up. You just click this link right here and get to my Discord. You can donate to me in Bitcoin and Dash. I don't know why there's an @ sign right there. That's probably messing up some of my donations. I should fix that. Oh, I'm in viewing mode. Editing mode. Alright, and yeah. Oh, and I'm basically gonna make it so that down the road you guys can put suggestions. So on my Google Docs for my videos, like I said, this is downloaded in the description. You guys can put suggestions. So instead of just being able to view it, you'll be able to suggest areas where you think I should do something differently in the next one, or fix the one that I currently have, just so that the whole community can, you know, profit better and understand how things work better. You know, as a teacher, sometimes I forget the very, very basics and how to teach them. And so there's a lot of questions that might come up, and I can answer them here or in my email at highaltitudeinvesting@gmail.com. You could go to my website, or you can follow me on Twitter and tweet at me, or the Discord chat, like I was saying, is a really great way. There's good community, people always talking, you know, always talking about something new. This is all this morning. All of this talk is all this morning. So there's always something being talked about. There's live trading voice channels. So if you want to, you know, connect your voice and do live trading, then you can do that. That's basically like a Skype call group chat, or you know, voice call group chat. It's very useful. But yeah, I hope you learned something during this video. I hope that you can now better understand how to read candlesticks and use them in your daily trading. I know it's kind of it's a really, really basic thing, but it's also a very fundamental thing, and you want to understand it very fundamentally. And remember to always be going back to it, because candlesticks can tell you a lot more than a whole bunch of indicators, you know, can. Indicators have their place, but candlesticks are a fundamental thing that are good to understand. So anyways, if you have a suggestion for my next video, go ahead and comment it in the description. I always put them on a huge list of video ideas, and then it might make it to the videos. Sometimes people comment and I do that comment that day, so you know, it really just depends. I upload daily, so be watching out for that. My Instagram is WaveStopMusic if you want to follow me on Instagram. My Snapchat, excuse me, is Seer Games, SEERGAMES. You can just add me. You know, if you have any questions, I post trading stuff on there and my Instagram. So, you know, go ahead and do that. If you liked this video, go ahead and hit that like button. If you have any constructive criticism, I'd love to hear it. If you can share this video with your friends, that would mean a lot to me. And don't forget to hit the subscribe button if you haven't already. Trying to get to 500, and my goal is 1,000. So yeah, I'll have a special surprise coming out for you guys when I get 1,000 subscribers. Anyways, I appreciate your time. Thank you for watching, and as always, stay profitable, folks.